Well, good morning, everyone, and happy Friday. It's Friday, it's January 17th, and all I'm going to say is, where in the world is this month going? I feel like 2020 just started yesterday, and it's already 17 days into the month. I got good stuff for you today. Now, I had an event last night. It was really, really cool. If you missed it for any reason, follow the link below now. Do not miss out. I gave away the details of my most aggressive and lucrative strategy, my number one trade right now. I gave away the ticker symbol. I gave away the stock. I gave away the rationale. Follow the link below. Do it now. All right, let's get into this. So we had housing starts come out. I wanted to wait a little later to do the report. Came out. Number blew away every possible expectation. Consensus was 1.373 million new starts. The number came out at 1.608 million. That's telling us that U.S. is expanding, more housing starts. This is really positive, and this is actually quite shocking if you want to know the truth. But this is just confirming what I've said. Interest rates are low, economy's humming. Things are not slowing down. Not even close. Not even close. Things are doing really, really well. So, here's what I got today. I want to talk to you about earnings, all right? Earnings. Today, either before the open or after the open, we don't have too many stocks, mostly financial. We got Schlumberger, that's a big one. We got Regions Financial Corp. We got a bunch of bank stocks, basically a bunch of financial companies. And here is the problem. The problem is, if you look at a bank ETF, the numbers are not as good as Wall Street's expecting. Some are, some not, but we're trading now below the 50-day moving average. I'm expecting this type of trend to continue and spill over into the broad market. Now, everything I'm talking about right now, I'm talking about large caps. I'm not talking about small cap stocks. So again, large caps a little bit overinflated in my opinion. As you could see here by numbers being actually better than expected, 2 out of 3 of the big ones, and we'll see more today and on Monday. But so far, Wall Street is not liking it. We're seeing a break below. This is the 50-day moving average, and now we're in the beginning stage of being in the twilight zone. I call this the twilight zone whenever we're between the 200-day moving average and the 50-day moving average. So I believe we're going to move lower. And remember, earnings are still being revised lower. So we started the quarter, I believe, at even revenue and numbers, and as the quarter progressed, we're now at like 3.4, 3.7 negative revenue. So again, keep your eye on the bank stock, on this ETF. Ticker symbol is KBWB. Keep an eye on it for the next week or so, because bank stocks and financials, as you could see here, are still reporting. There's going to be a mix next week. We got Netflix and so forth. But right now, the focus is still on financials. See bank. And this is the one you want to focus on. But so far, earnings are not bringing Wall Street up. All right. Now, it's Friday, and I know you guys know what Friday is. Friday is when I give you the top 3 stocks. Now, again, I'm gonna repeat this again. I'm talking about large cap stocks. And these 3 stocks are the fastest growing stocks right now, but they're overbought, as you could see here. AMD, I mean, look at this trend. Look at this. This stock went from, what is this, $30 to $50, barely a pause in the trend. I do expect it to have more upside, substantially more upside, but I'm waiting for a little pause. If you look at sectors, the semiconductors right now, and this is a semiconductor stock, technology semiconductor stock, it's grossly outperforming consumer discretionary, and typically consumer discretionary stocks and technology stocks are neck to neck. So I'm not happy about this, and I believe we're going to have a little cool-off period. So right now I'm focusing on small caps, but it's Friday, and I got to give you the top stocks. The next one is APA, another tech stock. As you can see here, it's just been gapping higher and higher. This thing started gapping around 22. It's at 34 right now. This stock is on my radar. Again, I like this stock quite a bit, but I'm looking for a pullback. Probably a pullback to the 50-day moving average once the 50-day. This thing is moving so fast, the 50-day hasn't had a chance to cross the 200-day. So technically, the stock is still bearish, but it's not, obviously. It's moving higher. Another few days, and we'll have that cross, the upside cross. But again, I would wait for a pull down to the 26 area. I think the stock is a little overbought. Again, nonetheless, I promised Friday 3 strongest stocks. This is one of the top 3 stocks. But I do want you to see that these stocks are almost, I mean, look at this. It's like straight. Remember, the longer something trends, the better the odds it'll begin a congestion period. And this stock is overdue for a congestion. Not a downside, not a lot of correction, just some consolidation to give it that period of rest before it can pop again. And finally, the last stock is Fortinet. These are all tech stocks. And again, look at this. This is crazy. It breaks out from the 85, 87 level, and it's at 119, 120. Again, 3 top stocks, AMD, APA, FTNT. Economy, super solid. This is really good numbers. I like this. Earnings, remember, they've been revised lower, and even with that, bank stocks are having an issue. This is causing some pause again in the large caps. I'm looking for a catalyst, and I'll explain to you why I'm so hard on the large caps. If you look at momentum levels, I've shown this to pretty much anybody who's been willing to look, but if you look at the S&P indices, and if you look at the number of stocks trading above the 200-day moving average, look at this over 5 years. Look at that. Whew. Wowzer. That's all I'm going to say. That's the highest level in 5 years, momentum levels. And if you look at 10 years, this is 10 years of history. Notice what happens every time we move above here. Or let's now move this higher. Let's go here. Look at that. Look at that. Every time, bow. Every time, pow. Every time, pow. Even right here. Takes a little time, but we move, and we're in that critical danger zone right now. Whenever you have over 80% of stocks in the S&P 500 trading above the 200-day moving average, that is an overbought market. Again, I'm not expecting a bear market. I'm not expecting any kind of major correction. Just a cool-off period. We really need it in the large caps right now. But that's the large caps. Small caps, whole different story. Yesterday, I revealed the details of the only system that I'm going to use to double my portfolio in less than a year. And I gave away the number 1 ticker and the stock, and I gave away the rationale. I gave away all the details. I explained why small caps are going to be leading in 2020. I spent over an hour yesterday, and I had a Q&A session. Folks, you don't want to miss this, all right? It's a complete plan to double your money over the next between 12 and 15 months. I gave myself an extra 3 months just in case, but if we can double our money on small caps, we're going to be doing really, really well. If you weren't able to make the live event, you've got nothing to worry about. I've made a replay available, but it's coming down soon. Follow the link below. Watch it now. Again, I gave away my most lucrative strategy for 2020. That's not overbought. I gave away the number 1 stock that you could still trade today. You can literally double your money in the next year to 15 months with this strategy. It's very aggressive, and it's specifically designed for 2020. This strategy is going to kill it in 2020. Follow the link below, learn all about it, watch the replay, get all of your questions answered, and have a great weekend. Talk soon.